Because our meeting is so early this month, there will be 2 additional items that you will see on the board agenda for approval on the 18th of December that are not currently on this agenda. It's the renewal of the Sweet Stevens contract for special education pool council services. We had approved that previously for 1 year, and we're renewing that contract, so we will have that. And then there'll also be the spring athletic bids, which we're just in the process of opening and entering into the system, but that will also be on the agenda on the 18th. Those are both, the spring athletic bids is a standard item, and then the Sweet Stevens, again, it's just a contract renewal because we had only approved it for 1 year.
Thank you, Michelle. I'd like to ask if anyone would like to come up for public comment. Okay, seeing none. Let's move right into approval of minutes. Did everyone have a chance? Do we have any issue with the approval of minutes?
Minutes are fine.
Okay, perfect. All righty. With that, let's move right into agenda item number 1. Michelle?
Chairman, that door was locked. So I tried to get in there, and I had to walk all the way around to the front, all the way up. So
Oh, pardon, Mrs. Sherry, if the committee doesn't mind obliging, if Mrs. Sherry would like to come up and make a public comment, I'm so sorry about that.
receptionist said they always locked at 4:30.
It should have been open because there was a meeting on the calendar, so
Yes.
I do apologize for that.
Mrs. Sherry, take a moment and bring yourself on up. Thank you. We'll just hold for just a moment. Thank you. Okay, welcome, Mrs. Sherry. So we're going to reopen public comment.
On your late too? Yeah. Did he walk in with you?
Unless he went to the back door first.
Did you get attention also? Am I getting attention?
No.
Apparently the back door was locked.
Got it. Welcome, Mrs. Sherry.
So, my my first comments are regarding the November questions that are posted online with answers that have a potential financial impact. In response to what the other Central League schools are doing about late start times, the district says, in their written response, at this time, several Central League schools are looking into this matter. Specifically, which districts are looking into late school starts, and where are they in this process, since there could be financial repercussions, and there will be, I guess, from changing the start time. Number 2, why hasn't stormwater flooding, this was my question, been addressed in public at a facilities committee meeting? The response was, this topic has been addressed at various meetings during administrative remarks. So specifically, other than the documented loss of a district vehicle, in what meeting minutes was any of the $300,000 of damaged district property addressed? And will stormwater losses be included as an agenda topic? Number 3. There will be major negative impacts, this is the question listed, to the district from the Penn development. What concessions has Penn received? Response, this question should be directed to the township or Penn Medicine. My apologies if I phrase this question incorrectly. The question should have been, there are major negative impacts to the district from the Penn development. What goals did the school district have on limiting this impact? And what concessions did Penn Medicine give to the school district, not receive from the school district? It's also important to mention that during most of the negotiations, Dave Falcone, who recused himself, was still representing Penn Medicine while serving as president of the RTSD school board. Number 4, based on the recent huge dollar amount that the township says is required to maintain the Matson Ford Bridge, isn't it about time to renegotiate the tri-party agreement? If not, what other shoe is the district waiting for to drop? Why isn't it a good idea to see if the district can get a better deal with different school board members, commissioners, and a different owner? Number 5, why did it take 3 questions, the first was very comprehensive, over a 3-month time period to get an answer to one question regarding Fox Rothschild's expenses and hours. And 6, in the October financial summary, it states that employee benefits demonstrates an increase of $428,307 over the last year. This variance is made up of increases in each area within the 200 accounts, but most notably in medical benefits, $201,843, and retirement benefits, $119,011. What's the explanation for the medical benefit increase cost? Was this medical benefit cost increase anticipated with the most recent negotiations, and is it projected in the budget, in the current budget? And I guess finally, regarding the audit report tonight, are there any surprises or unexpected comments about the audit that might not stand out to the average person looking over it? Thank you.
Thank you, Ms. Sherry. Do we have any other public comment? Welcome, Mrs. Spurtle.
Cindy Spurtle, Wayne. I would have been here sooner, but the back door was locked. You moved past it, huh? Questions and answers from the public comment from November. Now, just a quick question. These are November's questions and answers because it says October 2018 on the top. But above that, it says November. I figured it was, but I just thought serious question. The public has always asked for comments and questions that are asked at each meeting that we address the board. And one thing that's very obvious on this very first page from the Government Relations and Communications Committee meeting for November is that there are 4 questions that require board responses, and there are no responses. So since the public can only talk to the board, will the board respond to the questions that are not answered in this group of questions? And then I had some specific questions. I took time to go through the audit so that I could maybe understand a little bit better. And so I had some specific questions that if we can have a further explanation when the young man from the audit firm comes forward, and that is explanation of program revenue. On page 8, it shows a graph of the expenses and program revenue, and the program revenue shows us for instruction as $10 million and expenses at $60 million. I understand that revenues come from different places, and I tried to find exactly what the program revenue description was and wasn't able to. The second question I have was on page 10, and that was a comparison with other school districts in our area on the percentage of fund balance to expenditure budget. And Radnor's percentage is 20.55%. The next closest is Rose Tree Media at 13.16%, and they go down from there. So my question is, when asked in the past, and I will ask it again, why the need for such a high fund balance? And the answer to that has been that that helps with the AA or the 2A+++ rating that the township gets, but I also know that that's township residents' money that's sitting in that fund through tax revenue. And then on page 11, it shows a graph of general fund expenditures and other financing uses. And the greatest percentage, combination salaries and wages and employee benefits, is 72% of the total budget. I understand that that is the highest percentage. The question I had was another one of the next highest was purchased services. And my question was exactly just a quick short explanation maybe. That brings us up to 86.8% of the total budget. And then Ms. Sherry had mentioned about the increase in medical benefits, and in the explanation that's given in the audit, it shows that for the audit year that's being presented there was an increase of 11.7% from the prior year. And is the increase that's coming in this year and the figures we're seeing based on last month's numbers, was that expected, or is that over and above what you all expected for medical benefits? And then I just went through, based on, once again, this is the cost to educate our students based on solely on the number of students and our total budget. Looks to be $26,548, which to me is the cost of private school education or higher. One other quick question in the, also in that paragraph on page 13, it shows that the two largest, the state of Pennsylvania and taxes revenue to generate the revenue to cover expenses, and it's 98.7% is the remainder federal government funds, or is the source the small 1.2%?
Mrs. Spurl, you're past 4 minutes.
I have one more question, one more statement as not necessarily a question, and that was on the ERIP figures for the last couple of years. One that stands out to me is that for July, as of July 1st, 2017, there was one participant that received an incentive plan of $257,395. That's one big incentive plan to retire early. Thank you.
Thank you. Okay, seeing no other public comment, and already having done the approval of minutes, let's move right into agenda item 4.1, the draft audit presentation. Michelle?
So I'd like to ask Carl Hogan from BBD to come up and give us an overview of the draft audit report. Keep in mind, this is a draft. It is subject to change. If there is a change, we don't anticipate it being anything significant. And Carl, hopefully you can answer some of Mrs. Sherry's or Mrs. Spurtle's questions.
Yep, we can do that too. Sorry, is that good now?
Welcome, Carl.
All right. So I guess what the game plan is at this point is for me to go over a draft of the audit report tonight at the Finance Committee meeting. And the idea is the Finance will take this as a recommendation to the board. Are we going to do a final at the 18th, or are we going to do continue to have a draft? But I think we've always done a final in the past.
We will do a final on the 18th.
So in our office right now, our quality control has the work papers and the audit report, and if there's anything that comes up that materially changes the audit report, I'll obviously let you know, but I don't anticipate any changes here. And Mike, like Michelle said before, Mike will be at the December 18th meeting. So to kind of go over a shorter version of what I'm going to go over here tonight. So I'm going to start. Obviously, the most important thing in the audit report is the independent auditor's report on pages 1 and 2. And this report keeps on getting longer and longer, but at the end of the day, what this report is saying is that the numbers presented to us by management for the year ended June 30th, 2018 were fairly presented. I don't think we had any kind of material audit adjustments at all, or I think when we came out here, the books were pretty much adjusted to where management wanted them at June 30th, 2018, and that the numbers presented within this audit report are pretty consistent with what the business office was reporting to the board members on a monthly basis. Obviously, you're going to get some reporting in July and August that are going to change for June because accruals come in, et cetera, from the point when the year ends, up and through September. And I know Michelle tries to capture as much as possible, even if something does come through in September, to, record it back into the year that it pertains to. That being said, I'm going to skip right back to the back of the audit report to kind of go over the results for 2017, 2018. That's back on page 51. And I'll go back to the MD&A and try to answer some of those questions. So on page 51, this is kind of your budgetary comparison schedule for your major fund, which is your general fund. And this schedule shows your original budget, your final budget, and your actual numbers. and the variance with those numbers, related to the actual and the final budget. So as you can see up at the top, your total revenues were budgeted at $95.8 million. They came in almost exactly at $95.8 million. That doesn't happen very often, but they came in at $95.7 million. As you come down below, about 3/4 down the page, we're going to look at your total expenditures. We're going to look at them as a whole, not as all those variances on the right-hand side. But as a whole, your total expenditures were budgeted at $94.5 million. They came in at $93.7 million, and that's about a positive variance of about $900,000. When you take that $900,000 and you compare that, obviously, to the $95 million budget, you're within 1% or 2% for expenditures, which is great. Other financing sources down below, you have your budgeted amounts of $1.7 million. Came in a little lower at $1 million for positive variance of $700,000. So at the beginning of the year, you budgeted to use about $500,000 of your fund balance. You actually added $1 million of fund balance for a positive variance of $1.5 million. And when you take that, you'd rather be, it's within a couple percentage points, and you'd rather be on the positive side than the negative side when that comes to that kind of stuff. So at the beginning of the year, you had a fund balance of $19.2 million. You added $1 million, and at the end of the year, you had $20.2 million. And like I said, pretty good in terms of, when you're dealing with the $1 million budget and being within that percentage point there and overall results. Any questions, concerns?
Michelle, could you just put a pin in when we go in to start asking questions that I want to ask about the transfers out? Thanks.
Okay. So that being said, that's just the general fund and how it's compared to the budgeted amount. And I'm just going to skip again, and I'm going to go a little bit more to the front of the audit report on page number 19. So page 19 is the same information, the actual numbers that I just reported for the general fund, but then it also shows the different capital the other major funds of the school district, which consists of your capital projects fund and also the debt sinking fund, and then you have your non-major governmental fund, which consists of the community pool. So the numbers that we just went over, the actual numbers are there in the general fund. The capital projects had a pretty quiet year for 2017, 2018. The biggest thing that happened in the capital projects fund is the activity down below and the other financing sources uses related to capturing the activity of the refunding that you did. I think your refunding opportunities are going to kind of peter out at this point in time, but for 2017, 2018, you were able to take advantage of refunding those Del Val variable interest notes that, as interest rates go up, they're going to go up. So a lot of my clients are getting rid of those variable rates because the rates going up and taking advantage of some of the lower rates. So I think in the case of refinancing that with the 2017 and 2017A and 2017B, you saved about $800,000 so in future debt service payments. And then the debt sinking fund is the fund related to those QSCIB bonds that you have. So that money is accumulating in a fund until they become due, I think, in 2028 and 2029. So talking about the transfers that you want to talk about, there were two pieces of the transfers, or the biggest parts of the transfers, which were approved board transfers over to the capital projects fund of $695,000, $30,000 over to the community pool to kind of meet their operating deficit. And then you also have the transfer into the debt sinking fund, which equals the principal and interest payments that are due on those debt sinking fund payments. So when those payments come due, then they're not like your normal bonds. They're actually going into a fund within the school district's name, and they're being invested in U.S. Treasury strips. So at which point in 2028 and 29, when they come due, then that money will pay off those bonds. And I would assume that the debt sinking fund will no longer be around because the debt sinking fund was created with that ERA money, the Recovery Act money that was made. So it's just a different situation. So any questions, concerns?
I just want to address one thing regarding that. So if you're on page 51 and you're looking at the transfers out, you can see the original budget was 431, just under 432,000. And then you can see the final budget, and you can see the actual being $1 million, just over $1 million. The reason why the amount varies so much between the original budget and the actual is that debt sinking fund transfer that Carl was talking about. We don't actually budget for that debt sinking transfer because it doesn't really cost us anything because we're paying for it out of error money. So it's a pickup of a revenue and a pickup of an expenditure. It really is just a wash. But that's what's causing that large variance that you're seeing there between the original budget that was approved and what was actually spent. Did you want to add anything else to that?
No, I don't have nothing to add. I mean, I think normally too, some of that when you originally budget that stuff, you're budgeting some of that in the debt service as well. Because you think as a board, you're thinking that as debt service, not actually as a transfer over to another fund. So when you're actually doing your budget, you're thinking I have to pay interest and principal on these bonds. So that being that error money as well, as Michelle's saying, you're not paying any interest on it. So what you're doing is you're paying interest, and then what's happening is that's being refunded by the federal government right back to the school district, that interest money related to those bonds. So a lot of the school districts, when that money became available, they went ahead and borrowed that money because obviously it's cheap money and you're getting that money returned in the interest. So at the end of the day, the only stuff that's coming out of your pocket that's not being reimbursed is actual the principal payments. They're sitting in that sinking fund. So, any questions, concerns? No? All right. The next thing I'm going to go over is the balance sheet related to all those funds. So on page number 17.
I'm sorry, Michelle, let me just ask you to clarify something, because the actual was 1.8 on page 51.
Correct.
But when you look at what we budgeted, which was, original was 431, and then we went up to the 1.134, you're saying a large chunk of that is the debt sinking.
Well, it's the debt sinking and then the transfer over to the capital, because remember, we decided to use fund balance for that. So what
So I have to add up, so you know what it was? Carl didn't mention the actual amount of debt sinking, but I'm going to assume from page 19. Is it the,
It's 300,000. About.
well, was it the 281
The
or was it the
281, yeah.
194?
It's the 281.
Okay.
The,
So,
the 281 got moved over to the debt sinking fund.
so what happened to the $87,000 revenue? It's a
That-
net of 194.
That stays within the general fund. When that
So
money
we
comes
leave
back
the
in.
revenue in the general fund, but we transfer out the actual payment.
You're transferring out the actual principal payment because
Yeah,
the
no, no,
principal.
I get it. So we don't transfer over the net. You didn't mention the actual dollar amount of the debt
Okay,
sinking
all right, sorry.
transfer, so I was trying to do the math there, and I just didn't know if you used the 194 or the 281, but you
Yeah.
used the 281.
The interest, the net interest, the interest and the actual reimbursement for the interest is sitting in the general fund, but then the actual principal comes over to the debt sinking fund, because then at that point in time, the money will accumulate until, enough money accumulates until 28 and 29, and then
Pay
that'll
it.
be
Okay.
refunded, yeah.
Thank you.
And I do believe from your original budget, you did budget some money over to the capital projects fund, then you made some additional budget transfers for some additional, during the year as well. So page 17 is your balance sheet, so you have your assets, your liabilities, your deferred inflows of resources, which is basically a deferred revenue, and the excess of the assets over the liabilities and the deferred inflows is your fund balance. So if you look up at the top, general fund, total assets, almost $34 million. Total liabilities, $12.9 million. Your deferred revenue of the $900,000. And when you take the excess of the assets over those items, there's that $20.1 million we were talking about on the previous page after you've had the increase of the $1 million. So to stay in accordance with the 8% allowed of the next year's expenditure budget by PDE, the board has gone ahead and committed fund balance for those one-time, non-recurring expenditures. So in the case of Radnor Township School District, they've committed fund balance for capital projects at $6.5 million in accordance with their capital plan. $1.5 million, which is a combination of the monies that are still sitting in the curriculum and technology initiatives. And that amount increased based upon, spending patterns and things that are going to be needed in the future based upon what your future budget for those two funds are going to be. And then you have your employer retirement rate stabilization account, which is still sitting there for the increases in the PSERs. And then you have your long-term early liabilities committed for your early retirement incentive, and for the compensated absences, which accumulates up to $864,000. So when you take the $7.8 million of your unassigned and you divide that by next year's budget of the $96 million, that equals out to the 8% that's allowed by PDE. And then if you look at your capital projects fund, you have the $4.1 million that's sitting there, or the $4.6 million fund balance that's sitting there in the capital projects fund for future projects. And then you have the debt sinking fund of the 1.7 that's going to accumulate until those bonds are called. Questions, concerns? Okay. What I'm going to do is I'm going to definitely talk about the MD&A now, because I think there's some good information in there, and as we already know, if anybody's going to read the audit report, they're not going to read the audit report, they're going to read the MD&A and look for information related to 2017, 2018. I think there's some really good information. It's a probably the biggest thing, it starts on page 3. If you have, like I said, if you can't sleep, we did implement a new GASB for this year, GASB 75. So I know in previous years we had talked to you about recording the net pension liability for PEASers, but in reality you weren't recording the whole liability because there's two pieces related to it. You have the pension liability, and then there's a real small piece of the pension liability that's made up of the health assistance premium program. So in addition to the annual payment that the retirees are getting, they also get a payment related to some other post-employment benefits. So in 17-18, that got implemented in the current year, and it added some additional liabilities to those full accrual statements that we could kind of look at here in a second. On the top of page 4, consistent with previous years, kind of just outlines, hey, here's what our general fund did in the current year, and here's what the committed fund balances are for June 30th, 2018, and what the reason for those committed fund balances are going to be for. And then down below, that last bullet down there kind of outlines the $7.8 million, and that's within the $98 million 2018-2019 expenditure budget. Going along, I'm going to skip along, and I'm going to go to that graph that was talked about in public comment at the bottom of page 8. Now it kind of gets a little bit confusing. This is kind of just like a visual graph, and this is on those full accrual statements. So the expenses that are included in this graph here include not only those expenses on the modified accrual, like the normal expenses, but these also include depreciation expense on your fixed assets, any kind of changes in your actuarial liabilities for your net pension liability and for your other post-employment benefits. But the whole idea behind this graph is to kind of give people the idea that it's a visual to show you, hey, here's how much it costs to run the district, and here's what the state and what the federal government is giving us, and what we're charging for tuition, etc. And what's that delta between what we're getting for tuition, state, and federal revenue, and what we have to charge our taxpayers to meet that difference. So it's kind of showing the person that's reading these financial statements, you know, we're not getting much help, and that we're going to have to, you know, most of the money that's coming to run the school district is actually from the taxpayer. So it's kind of just a visual.
So let me just ask you a question about that, because to look at this,
Yeah.
could infer from this, it costs us $60 million to provide the instruction. I don't know if you see that in the bar graph.
That's, yeah, approximately, but that's with depreciation and all it's like those full accrual statements. So.
Or do you feel like, is this the clearest way that we can say that? Or is there a, because, I mean, or maybe we're, you know, I guess it depends on if you're doing this by fund or by object, right, Michelle?
Well,
As
those full accrual statements, they are categorized differently. I mean, they're kind of like objects, but PDE's given us, so instruction is made up of those not object codes, but those function codes, instruction, special ed, vocational ed. And then the instructional student support is your 2100s, your 2200s, and your 2400s. And then the admin and financial support services, PDE gave us, you know, when we put GASB 34 into place, they gave us like an implementation guide. So the administration and financial support services are the 23, 25, 28, 2900s. So it's kind of like.
I guess my point is they lump together objects, they lump together salary, benefits, and all that
That's
under
correct.
the function instruction.
Correct.
Thank
So
you. That's why it's.
This is more of a function
Graph.
rather than an object graph. And I think we're used to looking at
Object.
objects as
We are.
opposed to function. So it does get a little confusing for an individual reading the statement to know what's in instruction, most people would think that that is just the 1100s. But as Carl explained, it's all the 1000s. So it's your vocational ed, your special education, and your regular ed.
But I think more important than that, it's salary and benefits and healthcare, and it's all of
It's
it.
everything. It's every object from
Correct,
the
that's my point.
salaries all the way through the 900s. So it could be repairs and maintenance, it could be general supplies, it would include any equipment that was purchased, dues and fees. It encompasses a whole lot of expenses, professional services.
I understand that. I think my only piece of feedback, and I welcome it to hear from you guys, is perhaps some disclaimer that that chart is looking at those expenses through function, not object.
Yeah, we could do that.
I don't know a good user-friendly way to say that, but
We can talk about that
Yeah,
and make
okay. And I
make
don't know
some
how you
type
guys
of a
feel
slight
about that,
wording
but
change.
anyway, all right, thank
And I
you.
think the good thing on the next page, if you look at the bottom of page 11, so that graph is at the full accrual level. It's not the level of reporting that you're normally seeing because it includes the depreciation expense and the change in long-term liabilities. But at the bottom of page 11, this is by the object down here, down below the salaries and wages, the employee benefits, and it's something that not only I know you're used to looking at function as board members, but somebody that's a member of the public could look at salaries and wages and understand that kind of language. Employee benefits, purchase services, the purchase services consisting of, mostly, like your legal fees, your accounting, any kind of special education, any kind of tuition that's paid to any kind of cyber schools. And that's the verbiage that's given to us by the Pennsylvania Department of Education. They call it purchase services. So they break that out a little bit further into different types. They have professional and technical purchase services, and then it's kind of a whole myriad of different kind of purchase services, but it captures the whole gambit of contracted services, tuition mostly, and special education services are some of the biggest numbers that are in purchase services. Now to go back to I could talk about the school districts and the general fund balance as of June 30th, 2018. The great news is we do audit quite a few of these school districts, and I think it's kind of misleading to think that Radnor has, $20 million. What's happening in these other school districts is that they're taking any kind of surplus that they have at the end of the year and moving it over to a capital projects fund, where Radnor Township has taken the position of keeping $6.1 million in their general fund balance for capital projects. Because of the fact that, I think Michelle's talked about this before, once you move it to the capital reserve fund, you can't move it back. So even when you're putting your report into the state and you try to take money out of the capital reserve fund, you'll get a validation in your state report saying, no, you can't do that. So I think in the past, it's been a conscious decision by the board to say, I don't want to have my hands tied up by moving the money over to the capital reserve fund and not being able to move it back, whereas if I needed that money in the capital projects fund, I could just do another board resolution to uncommit that funds and move it to a different category. I don't know if that makes any sense, but I know definitely in the case of Rose Tree, Springfield, Unionville, Chadds Ford, and Wallingford, they have moved money over, a substantial amount of money over to their capital projects funds in the past couple of years.
Fund 32.
Fund 32.
Yes, Fund 32.
Which isn't, I'm sorry, Fund 32, which isn't reflected in, obviously, the general fund of Fund 10.
Correct.
That's the disparity.
So if
Got
we
it.
would have moved that $6 million, what would show on this schedule here would be
About $14 million.
about $14 million. But as Carl said, it's been a conscious decision of this board to leave it there earmarked for capital projects because it gives a lot more flexibility in terms of being able to utilize those funds for something else that you might deem more important.
So if we did that, it would be roughly 14.2 would be the number instead of 20.5,
Yes,
roughly,
roughly.
very roughly.
And I actually think we talked about this last year, because I think
We
I remember I
did.
just joined the Finance Committee. And I guess my question for you, since it comes up from the public each year, is there a reason what they're doing makes more sense than what we're doing?
I think it's just, it's an internal board decision, whatever you feel most comfortable with.
So it's they're okay tying up their money in a capital projects fund because they may actually have a capital project they're planning?
That's correct.
Okay.
Yeah, so, I mean, I know, and especially for Springfield, I know they're moving that money over to their capital reserve fund because they're building a high school, but at the same time, they have other capital improvement plans related to their other buildings because they have pretty old buildings over there, and they have a plan with that money, so.
So I can tell you that at Garnet Valley, one of the things that they do is they know every year they're going to spend, say, $1 million approximately on technology. So if they have a surplus, they'll transfer that $1 million over into their capital reserve fund, so they don't necessarily have to budget for it in their general fund budget. So as Carl said, I think it's just what you're internally comfortable with. I personally like it left in the general fund because I like the flexibility it gives us. We're not in a position where we're looking to put an addition, like when we were looking at Wayne and Ithan, where we planned for that over multiple fiscal years. We're not looking to do something like that. If we were looking to do some type of a major project over multiple fiscal years, it might make sense to move some money over, as long as we know how much that project is going to cost us. But the flexibility, I think, is important to have.
To give us some perspective, do you know what is that Fund 32 in some of the districts that you give an examples? Like what is their capital fund at?
I would say.
If you don't, that's all right.
I don't know off the top of my hands. I know Haverford does not have a capital fund as of yet. They haven't been in a position. But, you know, I would say that they're all, trying to think. I don't think any of them are too egregious in terms of, but, you know, they kind of hover around between $5 and $10 million.
So, but I think it just speaks more to, you know, even to your knowledge that if there's a school district that takes their surplus and moves it over to capital reserve with the intention of using it for what? Technology? I mean, we keep ours in Fund 10 in a technology curriculum reserve fund. So there are just a variety of ways in which we choose to keep our money in Fund 10, which frankly is, you know, for better or worse, it's a little bit, it gives this board a particular way to think about moving around money. It's just more obvious how much money we have. It's not that we don't have other money. We have Fund 32. We have the pool fund. This is more transparent. This is more a reflection of, at least as a percentage of everything we have. But I think it's just more reflective of how this board, and thus far, has chosen to deal with, you know, a large chunk of their money, of our money, of the taxpayers' money. It's not my money, but in any event.
And every board's different too. I know for Rose Tree, for example, they actually have a board policy that if it gets over a certain amount, that they have a board policy that they have to move it over to the capital reserve fund. So it's just everybody's own, what they're comfortable with their, what's best for the school district and the situation that they're in. You know.
All right. I'm a little bit mindful of the time. Do we feel like we answered the questions that were brought out in the public?
I think there's only two that we didn't answer, and one has to do with the medical benefits increase.
Oh, right. I do have that question as well.
And yes, we were anticipating that large medical benefit increase. When we first got our initial first look, it was a double-digit increase, and so we had been anticipating that. It was, I'm going to ask Todd if he remembers the exact number. It was somewhere between 12 and 15%, that first look. And when we were putting together the budget, we made the determination that we were going to reduce that slightly, and also retirement went up by a significant amount. So we reduced that, and then when we got our second look, we took a look again at the health care benefits and what employees are contributing and made the necessary adjustments. And the second one had to do with ERIP, because that involves personnel. I'm not going to address that specifically. It is, as was pointed out, one individual person. It will be going down as we move through until that ERIP is completed. And as far as I know, there's been no discussion about having an additional ERIP put in place.
Okay. Sarah, do you have any other questions from the audit? Mike? Okay. All righty. Well, you know.
One more last thing.
Sure.
I just want to touch on all the big things. So we got the clean.
Sure.
We got the clean audit report. We talked about the fund balances, and I just want to talk about that there was no, findings that need to be reported in the audit report. Obviously, we have various discussions with management about things that we think that they can do to improve, whether it be account coding or anything like that, and that kind of goes on through the course of the year, and we're out there for the audit. But in terms of things that would need to be reported to the board or in an audit report or any kind of formal report, then we didn't have anything related to that. So I just want to make sure that was the third and most important thing too, related to the audit.
Well, thank you so much. And, we will bring, with the committee's consent, we're going to bring this forward at the December board meeting. Great, thank you so
All right,
much.
thank you.
All right, take care. Thank you, Carl.
So the one thing that we, thank
Yeah,
you,
thanks.
Carl. The one thing we did talk about is Carl and I and Penny will see if we can clean up that graph on page 8 with some additional language
Yeah,
regarding
great.
the function.
Thank you so much. Okay, so then we're going to move right into our next agenda item.
So the next agenda item that we have is potential tax assessment appeals. This is on the agenda because the county has made some changes with how they file initiated taxpayer assessment appeals. Typically, the district would have had that information, and our solicitor would have had that information by November the 15th. Because of the changes, they are still working on those, and so we don't have all of the potential tax assessment appeals currently. We hope to have them by the 12th or the 11th. Ernie Angelos is our solicitor that's helping us work on those. So this is just a resolution asking for permission for him to file any assessment appeals that are deemed necessary based on the criteria that the district uses and has used over the past to appeal an assessment, tax assessment that was initiated by a taxpayer. The deadline to do that is December the 15th, and that is before our meeting. So we need to give him permission because he cannot file an assessment appeal without our permission.
Okay, so what we're looking for from this committee is just, we're going to be having this as an agenda item in an hour and a half or thereabouts.
It'll be on a special meeting after the board reorganization meeting.
Do we have any questions? No, okay. And then, just to clarify, Michelle, and this may come up in the board meeting, but, if an appeal goes through, the board at a later point would hear from Ernie likely in an executive session about a tax assessment, appeal if there's further information that we need about it.
Correct, and then we would have to approve the actual appeal if it's been settled.
Right, okay. Super, all right, so let's move that on to tonight's agenda. And with that, we'll move on to item number 3.
Item number 3 is a follow-up discussion on RFP services. So I know, Mrs. Stern, you had asked that this be included on the agenda. And if you want to.
So the upshot of it is that late last spring, we had a conversation in conjunction with the renewal of one of our contracted services, and the question came up about, do we do RFPs? How often do we do RFPs? And so I thought it might be helpful for Michelle to just give us a little timeline on the particular RFP. I don't know if it was a specific one or what information you want to provide for us, and then we can just have a conversation about what makes sense at this point, how to proceed.
So the one that we were talking specifically about was the legal services RFP. The last time the district did a legal services RFP was in August of 2013. That's when the RFP was due. They then interviewed solicitors who had responded to the RFP, and I didn't bring my notes with me, and I said I was going to do.
No, we approved it in April of 14.
And we approved it in April of.
March for April 1st, 2014.
And 14. And then there was a series of renewals because they were not on a fiscal year. They were on a calendar year. So there was a number of renewals that the district did and it eventually got them on the same fiscal year as us. Since we have been with Whistler Pearlstein as our school solicitor, our primary school solicitor, they have not increased their rates. So that's from the proposal that was submitted in 2013. Jackie's the one who did a lot of research on that for me, so if she can assist with any questions you may have regarding that, she's here and she can do that. Typically, we don't have a schedule for we're going to do an RFP for legal services every 5 to 7 years. I've had some discussion with some board members that there's good reason to have consistency with your solicitor and your auditor. If you change your auditor, there's always a cost to get the new auditor up to speed. The same with legal services. So while I understand it's always nice to have an RFP to see if you're paying reasonable rates, and you can certainly do an RFP for that purpose. If you wanted to see if what Whistler was charging us is reasonable, we could do an RFP to gather more information. But as I said, there is some value in having consistency as well.
Sarah, questions?
Well, you made the comparison to our auditors. When was the last time we went out to bid for an auditor? I didn't ask you before the meeting, it just occurred to me.
Yeah, I'm not exactly sure when it was, but maybe Penny remembers.
I don't remember. I know we did it during Tim's time, when Tim started, but then we also did a second RFP that BBD also won.
So Penny's not at the microphone, so you probably couldn't hear her, but she said that when Mr. Vail was here, there was an RFP that was done for BBD, and then there was a second RFP that was done, and BBD also won that as well. As far as the increases that we...
precedes you.
It does precede me, and I came in August of 2014.
Okay.
So the increases we've gotten from BBD have been very minimal. Very, very small. I can provide you with some information regarding that if you would like to see it. And
I'm going to say that RFP, now that you told me that you came in August of 2014, because I had just joined the board, that RFP had been done not too long before Michelle came on board. So we're talking about 4.5 or so years ago.
thank you.
Do we know?
That was a renewal.
Renewal, but for several years.
So, but we don't have a specific policy or just kind of just general practices on how often we go out to bid on various things. I'm frankly surprised that the board, that our legal services have not increased in cost in the last couple of years. With the economy, I know, I was just gonna say, with the economy and as a lawyer, I mean, those fees go up pretty regularly, so I'm happy to hear that. Okay.
Yeah, I was just wondering if, when we had kind of talked about this, a few of us, I don't even remember when, about maybe having the CAC, once they're done looking at the multitude of things that we have assigned to them already, like if we should put this kind of like we have a curriculum cycle, maybe we should have a RFP cycle for professional services. Maybe they should look at that and what the value is, because like you said, with the legal services, when you hire a new lawyer, they're going to have everybody reread everything that the previous firm has ever done.
And they have to learn how we like things
Exactly.
and understand, they have to get up to speed on all our contracts and any
Yeah, so
open
what's
matters
the-
we've got.
And we, especially with Whistler, I think we're paying them like $165 an hour or something, or
Oh, really?
yeah,
That's- Okay.
yeah,
Low.
Yeah,
yeah.
that is low.
I know, and it's, I see that, and I'm like, really?
I didn't say that low.
yeah.
That sounds like exactly what we should
Very-
be paying. I don't
Yeah,
want to pay a
exactly.
penny more.
Exactly, but I just, I mean, you know how it is when you hire a new firm, they want to get up to speed and have every associate in the office get up to speed and.
Well, I
See
mean,
what
and
they-
there's
see what they-
there's
No, there's
validity
value to
in
it.
that. But
There's
if we
value
aren't
to that,
having
but-
problems with our current solicitor, and there's no,
Yeah, if we
I'm not
were-
aware, but
Right.
I assume there's no Pennsylvania school code or other best practices book that says we need to be doing this more often, for financial leaders.
There's nothing that I'm aware of. I did search the PASBA website to see if they had guidelines on how often you should do RFPs. They did not.
Okay.
Transportation, if you contract your transportation, that's one that people typically do pretty frequently.
Yeah, I would imagine.
But in terms of a solicitor or an auditor, I think those are more infrequent.
Well, and it makes a lot of sense that they would be. I mean, my background, I used to do RFPs on the business side for food and facility services for school districts. And, I mean, there was, either school board policies or state laws or federal laws that mandated all that. But most of those contracts also had automatic increases every year. So you wanted to go out to bid every 3 to 5 to 7 years because you needed to try and get everybody to bid their price back down.
Yeah.
And you could do that. A lot of your vendors would then, knock off 2 years' worth of increases to try and keep the business. But I mean, if we don't have a financial need to go out and look for this, and
Or
I know there's a
competency
real
need, I mean.
disruption, is there a recommendation from the administration about? I mean, it sounds to me like you're averse to trying to go out to RFP for this because we don't have any problems right now.
As I said before, I think there's value in having consistency with your auditor and your solicitor.
Okay.
I'm not adverse to going out to doing an RFP if that's what the board desires. The concern I have with doing an RFP is as soon as you put out an RFP, the business office is going to start to get phone calls. People are going to be expecting that you're looking to make a change. And that becomes a little time consuming. But that's fine. I am concerned though if you do that and then you don't make a change, that solicitors and auditors may feel like, oh, we went through that process previously and they weren't interested in making a change. I'd much rather.
They may not bid the next time we
And
go
then they
out.
won't bid the next time around. I would much rather maybe do a request for quotations or something like that. I think an RFP makes it sound like we're willing and ready to make a change.
Mike, thoughts?
I've spoke my piece, I
Okay.
think. I'm fine with who we've got and what we're doing.
Okay, well.
I think it sounds like extra work for the business office when we've got a lot of other initiatives going on.
And we certainly,
yes.
I certainly
Well-
can go back to the CAC and say, the Finance Committee would like us to take a look at what is best practice for doing RFPs in terms of like solicitors. We have a contract right now to do our lawn care services. We did a renewal the last time. We didn't do an RFP, and maybe that's something that you should do.
Yeah, but
a
lawn
little
care
more
also falls more in line with food, facilities.
Well, so this gets to my point.
Transportation.
If your point was that in your area of work, there were RFPs done because you were trying to get your contracted services to kind of bring their rates back down, and we haven't even had an increase in rate, and we've been satisfied with the service, I think maybe at what I'm hearing is, maybe at best what makes sense now is to kind of put a pin in this for the CAC after they get through. We've actually asked the CAC to do some other work, and, I'm frankly more interested in some of those other things first, and then put this out there and let's revisit this in a few months and see if we even want the CAC to weigh in. And what did you call it, a request for quotes?
An
But again,
RFQ.
but that sounds like something that's about seeing if we can get the rates down.
Right.
They haven't risen their rates. So I'm listening
I
to
would
the
just
two of
say-
you. I'm not hearing a compelling,
Yeah, the only thing, like I said before,
Yeah.
like I said before, is to see if the CAC, when they're done with 4 or 5 things we already have, or they
They're
have four-
working
this
on
would be number
4
5.
different projects.
Yeah,
Okay.
that's why the number 5. This would be the 5th thing. When they're done the first 4, when you get to this, like, see if we should put these on some kind of cycle, like the curriculum, like 5, 7, whatever. If we're unsatisfied with the work that we're getting, but we're not. So
So one of the things I do want to talk about, though, and Sarah mentioned it, is with food service, when you're doing for a food service management company, things like that, there's a standard RFP that you have to use.
There's a state required
State
form, yeah.
requirement form, and that is at a minimum or a maximum 5 years. It's a 1-year contract with 4 one-year renewals. So that's got a 5-year life cycle. So I know there was a question earlier, did anybody talk about how
Yeah, but that
frequently
ties
for
to
the-
federal contracting
does.
laws because it's all mandated by the USDA.
So,
And it doesn't apply to us because we don't outsource our food service.
okay. So I'm just mindful of the time, and not hearing a burning desire to move forward on this, but Michelle, I do think that what might make sense is, to Mike's point, if CAC is busy with a number of projects right now, if you could kind of put it on the calendar that later, into 2019, let's get an update on what CAC is doing, what they've accomplished, and see if
We can
the
revisit
Finance
that.
Committee at that time wants to press forward with getting, best practices on the RFP process.
okay.
Does that
sounds
sound
good.
reasonable, Mike? Great, super. Okay, is there any new business? No?
No.
Okay, great. I will entertain second public comment.
Thank you. Judy Sherry, Governor's Circle, Newtown Square. Just a few questions as a result of the conversation about the audit. Number one, how many administrative contracts does the district have currently? Number two, what's the average number of vacation days in these administrative contracts? And then, what is the largest number of vacation days that could qualify for compensation upon retirement in these contracts? And just a comment about the solicitor discussion. I'm wondering if it's possible for the district to request specific solicitors from the list of a firm like Whistler Pearlstein. Because initially, my impression was that we were going to be represented by Ken Roos, and I have not really seen him participate. We more often have Michael Christofko. So I guess that would be my question. Is it possible to request representation from a specific lawyer within the law firm itself? Thank you.
Thank you, Ms. Sherry. Is there any other public comment? Okay, seeing none, I will adjourn the meeting. Thank you so much.